All right. Hey, gang, this is Carl White here on Loan Officer Freedom, the #1 podcast for loan officers in the world. And I know what you think, Carl, is because you're one handsome devil. That's not what it is. It's because of you guys. You ask great questions, you make great recommendations, and you forward this to your friends. And I'm very grateful that you do that. I'm joined today by a very, very, very dear friend of mine, one of my mentors. I've learned so much from this gentleman, Mr. Kevin Gillespie, who is also, so I think everybody knows I'm a branch manager, one of the top branches in the nation. And I actually do that in conjunction with Kevin Gillespie. We're co-branch managers, I guess is a better way to say it. So before I turn the camera over to him, you're on the right episode. If the question in your mind is, Carl, Kevin, how do I deal with the rate shoppers in a rate compression environment? How do you guys deal with the rate shoppers? So Kevin, brother, great to have you on board here today. Where are you located at today, my man?
Austin, Texas.
Austin. Everything's awesome in Austin, right?
Yeah, Lakeway, Texas. It's a suburb of Austin. It's great out here. It's beautiful.
Well, cool. Well, brother, it's an honor to work with you, my man. We joined forces here a couple years ago, and it has been an incredible journey. And if you look at the production in our branch, it's gone nothing but up. We just finished a record month. Again, thanks to the loan officers that grace us by letting us be a part of their team, because that's how this works. You understand that they're not on our team; they've graced us to allow me and Kevin to be on their team. Right? That's a good message for the branch managers out there. So dude, we get this all the time, man. I'm getting shopped. So I thought that's what we would kind of cover here today. So good subject.
I think it's a great subject, and it's probably one of the most important, because the ability, if you're getting calls, your ability to convert people, you're already doing the work. Right? So typically, if you can just see a 10% improvement in your conversion rate, you can see a 50% increase in your income.
Wait. I want to make sure everybody got that. So what you're saying is, we see so many loan officers say, hey, I need more leads. And come to find out that it isn't, most of the time, it's not more leads. Is they need to convert more of the leads that they're already getting, or start getting their leads from sources that have a higher conversion ratio. And that by increasing your conversion ratio of 10%, you could see an increase in 50%. That's a great thing. So when people are calling and we're getting the rate shopping thing, I think we need to put that in perspective. So I get people say, hey, I'm rate shopped all the time. Let's get a number, Kevin, that like for the loan officers that's in our branch, like if for every, and I'm just going to use round numbers here, like for every 100 leads that I get, and by the way, let's make sure we clarify, there's a difference between leads and referrals, and we like both, but we focus on referrals. So for every 100 referral leads that I get, referred leads from past database, realtors, referral partners, friends and family, for every 100 referrals that I get, how many closings should I expect from that?
Well, I kind of use I learned from you 25%, because it's worked, and we see it with our LOs. So if you're getting 100 of them, you should be doing 25 to 30 loans. If you get 50, you should be doing 10 to 12 loans at least. And those work pretty true. But if you're only getting 50 leads a month or referrals, and you're only closing 6 or 7 loans, that's about a 14% conversion rate. So that gets back to the point, you're already getting the leads. If you can get that up to 25%, you'd close 10 or 12 loans, you'd see about a 57% increase in your income by getting a couple of strategies that'll make a difference for you.
Yeah, I think that's a great point, because I think we all understand that all of us get shopped sometimes, right? All of us, not all the time, but sometimes we get shopped. And if you're closing 25% of your referred leads, you're good, right? Focus on getting more leads, right? And we have other podcast episodes where we talk about that. If you're closing less than 25%, so I just want to make sure that everybody understands the goal here is not, or the target here is not to get none of my clients shop me, right? You're not going to convert 100% of the people that you're talking to. And so if you get shopped some, but you're still closing 25% of your referred leads, you're good, right? You're whatever you're doing it at a high level. That's a good closing ratio. You might be doing more than that. Awesome. Focus on getting more leads. So I think one thing too that we have to understand, Kevin, is like nobody's got the best rates. That the key is like a balance. Let's talk about that for a few minutes. So you talk about a balance, having three kind of things that we're balancing. What are those three things?
Well, yeah, exactly. And the reason is often loan officers will think, I need a better price. I need a better price so I can compete. I need a better price. Well, when it comes to pricing, there's really only three segments to pricing. One is at what level are you priced? Two is your compensation. In other words, your incentive, because it's usually the biggest expense within pricing, and then your support and services. So the truth is you want a round balance where you got fair compensation, a fair price, and great support. And if you do, then you're going to be in great shape. The challenge is it's impossible to have all three. In other words, you can't have the most aggressive price, a high compensation rate, and great service. It's impossible to do it. There's not enough money there to go.
Something's got to give. Something's got to give. Yeah, something's got to give. Yeah, if you want great pricing, that's better than everybody else's, you're going to lose either A, pay, or B, the support service available to you. So I think that's a great thing, which goes back again. If you think you're going to win every deal because of rate, either your compensation or the support or the profitability of the company is going to suffer, for sure. Yeah,
and
for sure.
You and I both know the best loan officers we work with and know they expect to lose deals every day. They're not going to get them all.
All right. So there's you teach a thing about that. There's a couple of things that we're attempting to do when we're quoting. Let's go over that. So I'm quoting a rate. What's a couple things? Somebody calls up and say, "Hey, Carl, what's your rate?" And hey, I think I found something better. Like, what are some things that I'm attempting to do even before they ask that question?
Yeah, the goal is when they're calling in to quote, remember that's all they know to ask you, right? That's what they've been trained by everybody is what's your rate. But what you want to do is you want to build rapport and relationships so they feel that you're not only a friend, but an expert and they can trust you. And you want to educate them and you want to add value. The more you can show that you're adding value to them through this relationship, through education, from the services you provide, the less price concerns they'll have. As value is seen going up, price concerns go down. Absolutely. So, I tell people if it's just comparing apples to apples, it's always going to be about price. So you got to build that value and be an orange. Differentiate yourself by adding value, and your pricing concerns will go down.
Yeah, and that's a good point. And I know you at our last Freedom Club meeting, you're one of the leaders of our Freedom Club. I didn't mention that, by the way, that in our Freedom Club, which is our private clients that we work with, of loan officers across the nation, Kevin's the one that leads the group of branch managers. We call it the Branch Manager Academy. So just a little shameless plug. If you're a branch manager or thinking about being a branch manager, boy, you really ought to click the button that's somewhere on this page and set up a call and we'll walk you through what that looks like. But at our last Branch Manager Academy, you brought a thing up that the borrower who is calling us is skeptical, right? That when they call, assuming this is not a past database, by the way, they're somewhat, even if they're referred by a realtor that they trust, they're somewhat skeptical. And again, all they know to ask is, what is your rate? And oftentimes you talk about that oftentimes maybe they had a bad experience in the past with a lender, and they think, as a loan officer, we're just trying to reach into their pocket the most money we can grab as possible. It's what they're really looking for is just value and security and developing that trust. And so you talk about developing characteristics of the best originator. So like if I'm an originator and I'm looking to develop those characteristics of getting people to trust me, what do I work on?
Well, I think it's a mindset and a belief system, because we're going to go where our beliefs take us. And if we think, man, I'm not priced low enough, it's going to mess up your head and you're not going to win. As you said, nobody has the lowest price. None of our top originators have the lowest price by far. There's enough people out there that love the service I provide, and will do business with me. So I don't care about the ones who will not, and if someone tells me no, I can handle it. And there are plenty of people that see my pricing as fair, that they see that we're competitive. And there's so much volume out there. All I need to do is go get another percentage point of volume, and I'll do all the business I need to. Those sort of mindsets, you really got to have that. And you can't be concerned about price. Every time loan officers get focused on price, it tends to mess up with their production and what they can convert. You got to go in assuming you're going to win.
Yeah, I like that. And this is going to sound off topic, but just follow through with me. I'll never forget a time early in my career. I got email was kind of, I'm not going to say new, but it was newer, right? This is a long time, but I've been doing this a long time. And so email was newer, and we emailed out a large group of real estate agents. And I get a call from the office, kind of a frantic call, meaning to help me, right? My team has always had my back, right? I got their back, they got my back, right? So they called me up and they said, Carl, we really screwed up. I wish we could pull back that email because everybody's opting out. I said, crap, everybody? Yeah, bunches and bunches. I said, how many? Too many to count. I said, estimate. And I remember the number they came up with was like 22. 22 people opted out. All right, we sent that out to 16,000 people, right? 16,000 people, right? So, and the person that called me about this, very, very, very smart person, right? Very smart person. This person wasn't used to any opt-outs, right? And so suddenly you get a couple dozen, it seems like, holy cow, it's everybody. But out of 16,000, it was 0.0001. Here's my point of that story. We have to be careful with using words like everybody, all the time, always. I'm always getting shopped. This has happened to me all the time. That crap gets in our head and affects us negatively. When you really look at the numbers, say, well, wait a minute, it's not everybody, it's about half. Well, just being brutally honest, we close about half the people that we could close a loan for, or we actually close a loan for. The other half end up either A, not doing it, B, getting another loan through somebody else, or whatever. They fall off the map, something happens at the last minute, they don't qualify, whatever. So we can't use the words like because we're not going to close all of them. And I think just having that mindset that it's okay if some people shop us. It's okay if we don't win all the deals. It's okay if we don't fund all the loans, right? That's okay. Just plug in the real numbers and have that mindset that you're still helping a bunch of people, and just go get as many as you can. Does that make sense? Was that?
Absolutely. I think you're right on.
All right.
When I get focused on those wrong things, boy, they can really mess up with you.
It does. It plays in my head, my head. I always think our heads is the most valuable real estate possible. Don't give that to people, right? Don't give that to people. So, all right. Another thing that you talk about, and I thought this was fascinating. We were having a meeting within our own branch here a couple weeks ago, and you talked about a thing that you called understanding the games other people are playing. And you remember what I'm talking about?
Yeah, and exactly. Because often when people are coming to you, what they're doing is they're going online and they're shopping. And if you go to a realtor.com or Bankrate or any of the online services or online lenders, you need to understand that they purposely advertise low. So I'm going to suggest to the group, hey, go into realtor.com and click on mortgage lenders and get the list of loans. And what you're going to notice is a couple of things. One, the rates aren't really that much better, but those that are lower, they will also, I think about the other day I looked at this, and Rocket Mortgage had prices at 5.25 and they had them at 4.5. But the 4.5 is a lot what they'll advertise, but it also came with a point and $3,200 in fees. And you'll see this. The other thing you'll notice is if you go in on any of these online services and you click next, they start asking you questions that are real quick, easy to answer, takes you 4 or 5 minutes. I'm going to suggest you do this. And you'll notice it keeps finding all they're doing is it's lead generation. They're collecting more and more information on you. And as it gets down towards the end and you're going, oh, do I really want to answer this? They'll say, this needs to be answered for us to get you an accurate quote from this lender or any other lender. And so the point is these quotes that are out there, they're usually for a 70% LTV with a 780 FICO score. And the truth is it's not going to be the quote they're going to get at all. And when they do get the quote, the low ones are going to have discount points. Now, the other thing with that we found is several of the big banks and several of the other companies are conservative, and they tend to overquote closing costs because they don't want to be under. And so what happens is they will quote, like if in the state of Florida there, one of the big box banks is going to quote, and they're going to include transfer taxes in there. Well, you and I know that transfer taxes, 90% of that is paid for by the seller. So they've got a couple $1,000s extra in closing costs. And so my whole point is you can be just like these people online, and you can start quoting origination fee and or discount points to drop your rate and be more competitive. In fact, several of our loan officers, Carl and Monty's loan officers, have started doing that and are picking up all sorts of business from it. So there's a couple of points I made there. I hope I didn't.
No, that's good stuff. So yeah. So I found it shocking that, so when these big banks like Quicken, when they're quoting their rates, they virtually always quote it with at least 1 point, right? And so that gives us about 0.5%, give or take,
Depending on the loan type, yeah.
Yeah.
It'll move on government loans. Give you much more movement. Conventional, not quite as much because of the way the securities are traded, but it'll help either way.
Yeah. So, and again, just using easy numbers, I'm just going to use round numbers. These are not indicative necessarily what rates are today as you're listening to this, but just as just for figuratively speaking, let's say rates today are 5. I'm just going to say a number, 5, easy to quote. So rates today are 5. What the big guys and gals are doing online is they're not quoting 5, they're quoting 4.5 with a point, or give or take. You get the idea behind this. And so when we had one of the loan officers in our company shared that she quotes all of her rates with a 1 point, either discount point or origination fee. And I thought that was very interesting. So I asked her, I said, now, are you using that just as a lead generation that then you actually end up closing them at the no points? And she says, no. And this lady's closing like 20, 25 loans a month of personal production, right? Not other loan officers, her own closings, 15, 20, 25 loans every month like clockwork, absolute animal. And she said, no, that she actually closes them with that point at the lower rate. And that has just squashed people shopping her. So I thought that was just very, very interesting. So that ought to be something you definitely start looking at, is quoting your rates with one origination fee. Because again, that's exactly what we found, like the Wells Fargo's and the bankrate.com people and the Quickens of the world. That's exactly what they're doing. So let's transition here a little bit on, like, the name of the game is, so strategy number 1 you can do is throw in an origination fee or a discount point or whatever your company, your compliance does to buy the rate down. Use that as your quote. Number 2 is to connect with your borrowers or your prospects better. And we can do that one of 2 ways, and we'll talk about both just briefly. We can make sure that we're marketing to our past database, because they're going to tend to shop us less because we've done business with them past already and they already trust us. But number 2, there's some methods that we can use to connect with our prospects better too. And I know our friend John Hinks is using one of those strategies. Let's talk about that. So I'm a loan officer. I want to keep people from I want to stop having as many people shop me. What's some things that I can do with my prospects that I haven't worked with before, I guess, and our past database? What are some strategies I can do to get the trust factor up higher so that they're less likely to shop me?
I think there's 2 or 3 things. One is what most loan officers do. Somebody calls in, they ask what's your rate. They start to quote the rate. And what you need to do is have a script that gets them understanding you're watching out for them. So a good script on that is something to say, man, that's a great question. I'm so glad you asked that. Everybody asks that. But the truth is, rate's probably about the 3rd or 4th most important thing you should be concerned about. The first most important thing is your goal or your game plan. What are you looking to get out of this mortgage? Because just because you can afford a $5 million house doesn't mean you should be buying a $5 million house. The second most important is what's your break-even point. And as we get into the pre-qualification, we'll go over that. Third is not what the interest rate is, but the amount of interest that you pay. That's more important, is how much interest you pay versus your rate. And then fourth are your rate and fees. And so what I'd like to do is let's talk about your goals. And when you use a script like that, they will understand you're watching out for them, because most people they're calling are not doing that. And then you get into digging and asking a lot of the questions about their goals and whatever. And then another strategy is to become the expert. This is where you add value and show them, for instance, are they better off on a 20-year loan where their equity builds twice as fast, they'll pay less interest, right? And it's only cost them a couple $100 difference a month. And, or you could show them how to do a 15% down versus 20% down and do one-time lender pay to MI, and the payment's not going to be much difference, but they keep a lot of the cash. So these sort of strategies to get them to understand you're really looking out for them is very important. Now, the other thing is there's an old saying that a picture is worth 1,000 words. And we've all heard the statistic that people only remember about 7% of what we say. So what I'm going to suggest is something like John Hinks, who you mentioned, does, is he shares his screen in a Zoom meeting deal, and he goes over the numbers, and they will show things like Mortgage Coach or some sort of quoting system that creates a picture for the people and helps tell that story. And then he follows it up with an email in a bomb video. And the whole time, people start to understand John's a real person. He's looking out for me. He's given me facts. I can see it here. That officer who just answers the question, what's my rate?
Yeah, I like that. And you know, I think like doing the video where you like what you just said, I'm a real person just like you, is absolutely brilliant. I tell you, it's done extremely well for me. And I can't speak for John, but I can speak for myself. You don't have to be a Brad Pitt to be wildly successful at the video marketing. I think a lot of people get tied up in, well, I don't like the way I look on camera. And I've always told people, like, I got some bad news for you. That's what you look like all the time. Right? I mean, like, you're just seeing yourself. That's how we see you. Gee, the camera makes me look tall or skinny or fat or ugly or less hair or more hair or darker or lighter or what. That's what you look like, right? When you go to the store, that's what we all see. All right, you're just seeing yourself for the first time that way. So, man, it's totally cool, right? It's just like, you don't have to be a handsome devil to be wildly successful at video for people to trust you, right? You just gotta come across, because that's the way you are, that you care. So I like that. Something else, again, just in closing here, I know we got to wrap up on time here, but there's two other points I want to bring up real quick. Is make sure that you're tying yourself to the strength of the relationship with your agent. So I have found, Kevin, that when I'm getting referred by agent A, I'm getting shopped all the time. And when I'm getting referred by agent B, boy, it doesn't seem to be half as much. So I think a lot of it is just trying to teach my agents how to refer to me. And if I got somebody that's not teachable, maybe it's better to cut the tie.
Well, yeah, you need to have those conversations with the agents and get them to give you what we call a steaming handoff. where they brag about you and say, hey, you can shop all you want, but do yourself a favor and at least talk to Carl, because he is awesome. He knows his stuff. He's going to watch out for you. And when you get an agent, and then you should ask, hey, what did the agent say about me that referred you? I'm just curious, because I always want to look to improve. And what you're trying to do is tie that relationship, because they obviously trust that agent. And what you want to do is get kind of them, the people then to think, well, I trust my agent. The agent referred me to Carl. I think I can trust Carl too.
Yeah. Yeah.
Right.
I like that, man. I've never thought of that, but to say, what did the agent say about me? Because then out of their lips, they're saying, well, the agent told me that you've been in business for a long time, you know what you're doing, and that I could trust you. And as they're saying, I can trust you, they said it come out of their lips. So I like that. It's a very powerful influence tool to be used, of course, in a cool way. Last thing I want to handle here due to time, we can talk about this all day, but last thing I want to handle, at least on this episode, is talking about our past database, that we find our past database tends to shop us less. So you brought a shocking fact the other day that, what was that number, percentage of refinances that are cash out?
In any marketplace, if you look at the last 20 or 30 years with the MBA statistics, regardless of what interest rates do, is about a 25 to 30% of the market is still refi, because life happens. I need cash out. I need to pay off debt. Kids going to whatever. And we've seen so much house appreciation here the last several years that refinances, even though rates went up, were still a third of the business. And 81% of those refinances were cash out refinances, which means life's happening, guys. So we have one of our loan officers the other day, he refinanced a guy from 3.75 to 5%, but saved him in his monthly cash flow. So don't get caught up in the fact of thinking, well, that person's rate's lower than where they're at right now, I may not be able to help them. As a trusted advisor, expert, you want to be talking to these people all the time and see what's going on in their life. And you're going to pick up a lot. We have one guy in the club, he's out of Arizona. He does about 40 units a month. He told me the other day, he goes, I just started working my database after listening to you and Carl. And he saw a huge improvement in his business. And so many loan officers just don't. But guys, there's a bucket of business to go after right there.
So make sure you work in your own database, because that'll give you the highest conversion rates of anybody. Of course, always as long as it's in their best interest. And that 81% of refinances last year was cash out refinances just blows my mind. I would have never guessed that number. That's absolutely incredible. And sometimes I hear people bragging, and I've done this in the past too, bragging that 95% of my loans are purchases, meaning that I'm working the purchase market and not reliant on the refinances where we get those ebbs and tides depending upon what rates are. But what I found out, that if I'm not doing at least 25% of my current closings aren't refinances, that's an indication I'm not working my database. And that when they're going through life situations or weddings or divorces or, life happening or pulling cash out for debt consolidation, if I'm not getting at least 25% refinances as part of my closing portfolio each and every month, that's an indication I'm not marketing my database. I'm not helping those people when I need to be helping them, and they're counting on me. And so I'm going to help them, and they're going to shop me less. Again, not that we take advantage of that, right? We give very fair pricing to everybody. But instead of them trying to squeeze an extra nickel out, the lowest nickel out of us, past database tends not to do that. So make sure you're marketing to your past database. And if you're not sure, well, how do I market this past database? There's a link somewhere on this page. Let's get you hooked up, and we'll walk you through the exact strategies of how we do market to our past database. And that's just a plethora. We've got people in our group do nothing but marketing the past database and have just an enormous book of business going just by working the past database. So cool. Anything, I know we're short on time here, brother, but anything I didn't ask you? I know we could talk about this for a long time. You got a lot of
Yeah, no, I think we gave some great points that first get these down, and then we'll share some more in a future episode.
All right, sounds good. Well, brother, I appreciate you, man. Thanks for being a leader in the group. Thanks for teaching me so much.
Thank
Friends,
you.
as you're watching this, be sure to reach out and give some love to Kevin. He's just an absolute amazing guy. And if you'd like some information, if you're thinking about being a branch manager, or you are a branch manager and you'd like to learn how to run it even more profitably, even more growth, Kevin has a great program in the Freedom Club that I'm honored to be a part of, where we work on you on a one-on-one basis, and our goal is to make you a top branch manager, just like Kevin and I are. So again, there's information on this page. Click that, and we can also, for those of you who'd like to talk about how do you market to your past database to make sure you're getting these refinances that you should be getting, even during a purchase market. Happy to share that with you too. No cost. Happy to share those strategies with you. Thank you, brother. Appreciate you being here, Kevin.
Appreciate you, man. Thank you. I'm humbled and honored. Thank you.
All right, gang. Thanks again for being here, and we appreciate those 5-star reviews. Thank you so much, and also thank you for forwarding this and reposting this to your loan officer friends. It helps us grow. We get more questions. We can bring you better content, and that's what it's all about. It's all about you. So thanks again. You're listening to Loan Officer Freedom. We'll see you on the next episode, and we'll talk to you when you call in by clicking that button somewhere on this page. Bye-bye, everybody.